What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we had a mixed bag with the Nasdaq 100 and the Russell 2000 going higher today while the S&P 500 and the Dow Jones closed lower. Today was also quadruple witching, so that is now behind us. First up, we're going to take a look at the Nasdaq 100 futures. So let's crack open this chart and see what's going on in the stock market today. Alright, so just a reminder, this is the Nasdaq 100 futures chart, so we have a lot of data to look at here. We're currently looking at a 4-hour chart, and you can see this pattern is developing on the Nasdaq 100 of a left shoulder, a head, and a right shoulder, and this is called an inverse head and shoulders pattern. Now, if you're not familiar with head and shoulders patterns, typically they're a bearish formation when they're formed in the other direction, and it means if you break below the neckline that you're going lower. So in a bearish head and shoulders, you would form a left shoulder, then you would form the head, and you would form a right shoulder, and if you break down below this neckline, you typically travel the distance of the head below the neckline. So that's the pattern formation, and in the inverse direction, it's usually considered a bullish formation. Now keep in mind that this is not an inverse head and shoulders unless we get a breakout above this neckline. So the neckline level is somewhere around 13,300 on the NDX. You can see that we're coming into this very critical support level down here around 12,700, and if that level breaks down, this pattern's not likely going to play out, and we're going to increase the probability that we're going to see a bearish scenario. So in order for this inverse head and shoulders to play out, we would have to start bouncing off this support level, which we already did start to do with today's price action, come up to this neckline, possibly not break out the first time, and then eventually we should break out above that level if we're going into a bull market. Now the interesting part about breaking above that neckline is, like I told you just a second ago, you'll typically travel the distance of the head in the head and shoulders once you get that breakout. So that is about an 8.3% move from the top of that neckline to the bottom of the head where we found support. So if we move that distance and when we finally do break that neckline, we would be looking for somewhere around 14,390 on the NDX. Now this is mostly speculation because this still has to break the neckline for any of this to play out, and there's really no guarantees with patterns like this. It's just an interesting pattern that is forming, and it does favor bullish probabilities. Now another way to look at this is that we're just forming higher highs and higher lows. So either way, whether you notice this inverse head and shoulders pattern or not, as long as you recognize that the market is forming higher highs and higher lows, and we break a critical resistance level, you're still going to identify this bullish breakout. So remember, on the triple Qs, that breakout level is somewhere around QQQ levels of 324. So we'll get into that later when we look at the Nasdaq 100 triple Qs. But I wanted to show this on the Nasdaq 100 futures chart because there's a lot more price action to look at, which shows this pattern a lot cleaner. So I know some of you were asking about this pattern, and it's definitely something to keep an eye out, and it definitely gives you a very critical resistance level at that neckline and a very critical support level at the bottom of the right shoulder. So it's always nice to know where your critical supports are and where your critical resistances are so that you know exactly how to trade the market if we get a break in either direction. You never want to be 100% bullish biased or 100% bearish biased. If you're a trader, you want to remain flexible and go with the trend. If the trend is bearish, trade like a bear. And if the trend is bullish, trade like a bull. If the market starts chopping around, you can still buy off support and sell at resistance, or short at resistance and cover at support. All right, so let's jump over to the Nasdaq 100 triple Qs and let's break down what the price action did today. We went up 0.35%. and we got a close over that very critical 313 support level. Intraday, we did bounce off of that strong support level that we had at 310, and because we never closed below that strong support level at 310, we never actually tested the critical support level at 307.60. Now, as far as the price action goes, we're still bearish on a daily chart. The price action is bearish because it's closing below all of the moving averages. The trend is also bearish because we still have negatively sloping moving averages, and the moving averages are still trending to the bear side. So the price action and the trend on the daily chart are still bearish, therefore we want to remain defensive. Now let's jump over to a 1-hour chart real quick and really break down the price action moves that we saw today. So don't forget last night's episode where I said this is likely a 5-wave move to the upside, and after a 5-wave move, we do need to have a 3-wave move corrective to the downside, which is this ABC. So for the bulls, it is good that we saw a bounce off 310, but this wasn't really a very impulsive bounce just yet. Even though we did break back above that support level at 313 and hold above it, we still need to see confirmation of this move going into next week. If we break back down below 313 and come back and retest 310, and that level does not hold, it's going to be a very quick trip down to 307.60. Now remember, below 307.60, We're no longer really looking at bullish scenarios in this market anymore, and we're going to start favoring the bear scenario. The bear scenario could take us all the way back down to Triple Q's levels of 297, and if that level breaks down, we're likely going down to 280. So remember, critical support on the Triple Qs is at 307.60. Now the critical resistance for the bulls is up here at 324. If this was the corrective move to this wave 1 and we're going into a wave 3, we should start blasting through these resistance levels with very decisive, impulsive moves, and we should have no trouble breaking through these resistance levels. Eventually, when we get up to 324, it's going to be much more challenging to break through that level. But if we do get a daily close over 324, then we're going to be bulls and we're going to favor the bullish scenario. That scenario could bring us all the way back up to all-time highs, but we don't want to focus on all-time highs until we get a confirmation break above 324. So just to recap, we're bullish above 324 and we're bearish below 307.60. Anywhere in between is a chop zone and we could do absolutely anything. There's no guarantee that we have to get impulsive moves. It's still a possibility that this market's just going to chop around and go sideways. So look at this range that we're trading between 307 and 324 is a little over a 5% range. So there's still a ton of trading that you can do in this range. And don't forget, on the Stocks Channel Discord, I'm doing hourly updates to keep you on the right side of the trade. So these support and resistance levels are great levels to trade off of. And you could trade these levels as a bull or a bear, and we have bulls and bears making profits during these times on the Stocks Channel Discord. Some people just prefer to take the short trade, and other people just prefer to take the long trade. There's no right or wrong answer. As long as you're being profitable, then you're doing it correctly. So we have plenty of resistance and support levels to trade off of, and those critical levels are, like I said, 313, and above there we're looking at that 316 level and that 317 level. If we could start breaking back above there, we're going to start retesting 320 and possibly 322, and we're going to start getting more and more bullish the higher we go in this market. Now, if we can't stay above 313 and we start breaking back down to 310 and 307, we're going to start getting more and more bearish in this market. So we're at a very important crossroads where as we go higher, we're getting more bullish, and as we go lower, we're getting more bearish. The reason that is because we're right in the middle of a very critical pivot. If we go higher from these levels, we're going to start looking more bullish almost immediately. And if we go lower from these levels, we're going to start looking more bearish almost immediately. Normally, the market is not that clear cut, but at this specific moment in the Triple Qs, we're at a very critical level, which is right around 313. This 313 level has a lot of importance, and if you noticed, the price action continues to gravitate towards this level. It's no surprise that we continue to come back to this level, because if you go back to March 9th, you can see how critical 313 was as a resistance level. When we finally gapped up above that level, it took us no time at all to come back and retest that level, and then we went too far too fast again and got rejected at 324 with a mini double top pattern, and now we're back to 313 yet again. So right now, just focus on 313, and if we go below 313, get very defensive or get bearish around 310 and 307. But if those levels do hold up and we start breaking back higher, then you can start looking at bullish probabilities yet again. So it's going to be very important going into next week, if you're going to trade this market, to be very flexible and watch these levels very closely. So just to recap on the daily chart, don't forget that we're still in a downtrend, so we still want to be bearish and we still want to be defensive on this market. However, we are possibly developing a bullish trend, and we could be finishing wave 2 and getting ready to head into wave 3. So you just need to remain flexible and be prepared for either scenario, and just make sure you're in a position in your trading where you could jump ship and go to either side of the trade, and don't get over leveraged to one side or the other. Next up is the S&P 500 SPY ETF, and we saw SPY going down a little over 0.5% today, but still closing over top of that 20 simple moving average. One thing to note on SPY is that the 20 simple moving average is relatively flat, and it's not really positive sloping or negative sloping. So that could be a sign that the market just wants to chop around and it's not going to have any strong trending. But if it does want to start trending, we need to start breaking back above this 390 level. There's going to be resistance around 390 and 391, and even above there we have resistance around 393 and 394. So there's a ton of resistance that SPY has to break back above to get back to the all-time highs around 397. If we can break above 397, we still do have that outstanding price target at 404. But take the market one day at a time, and we still have to get back through these resistance levels before we even consider 404 as a price target again. You can see the trend is still bullish, but it is starting to look like it could be reversing if we do start getting price action closes back below the 20 simple moving average. So if you're bullish, you need to see SPY stay above the 20 simple at 388. And if you're bearish, you're going to look for a close below the 20 simple and possibly a retest of the 50 EMA at 384. So the critical levels on SPY for support are 388 and 384, because if we start breaking below those support levels, the bulls are going to need to start looking at exit strategies while the bears start taking over. If the bulls can keep the price action above 388, there's a better probability chance that we could go back to all-time highs if we bounce off those levels. Next up is the Dow Jones, and we saw the Dow getting hit the hardest today, going down over 1%. We closed below support at 327, which means the next support level we want to watch is down here at 322. We're still in a nice bull trend here, and we still have bullish price action closing well above the 20 simple. So looking at the trend in the price action on the Dow, this wasn't really that big of a deal, and we did open a gap above that'll close at a price target of around 328.60. So right now we need to close back above 327 to look back to our price target at 336. Below 327, we're looking for that level as resistance, with possibility of testing support at 322 or the 20 simple moving average around 320. The bearish probabilities pick up if we close below the 20 simple, and we're likely going to retest the 50 EMA around 315. But don't forget that the trend is your friend, and if you're looking at the Dow Jones, it's still in a very nice strong bull trend, and the price action is still very strong and bullish. Next up is the Russell 2000, and we saw the Russell going up about 0.75% today and finding support right at that 20 simple moving average. We did close below the 5 EMA, but we still have a bull trend, and the Russell 2000 is still looking like it could go higher. We're going to have resistance right at that 227 level, and above there we're going to find resistance around 233. Downside supports the 20 simple at 224, and these previous support levels which take you all the way down to about 222 before we would break down below there and probably test the 50 EMA around 218. So the Russell starts looking bearish if it closes below 224, and then we're likely retesting 218. But above 224, we could still go back above 227 and go back up to 233. So as you can tell, a lot of these indices could go either direction right now, and there's really not a strong trend in either direction. So go with the trend that's in the higher degree. So right now on the daily chart, you still have a bull trend on the Russell, so you don't want to get too bearish until you see the price action starting to break down below critical support levels. You cannot hide price action. There's a lot you can do to look at fundamental analysis, and you can try to speculate on what's going to happen. But at the end of the day, if the price action is bullish, you want to be bullish. If the price action starts breaking down below critical support levels, you want to be bearish, because there's no way you can look at price action breaking below critical support as anything other than bearish. So one reason I prefer technical analysis is because the price action cannot lie to you. If you're closing below critical support, that means the market wants to go lower. If you're breaking above critical resistance, that means the market wants to go higher. If you keep it that simple and then you follow the trends in the price action, you're generally going to be on the right side of the trade. Next up is the ARKK ETF, and we saw ARKK going up 1.91% today. The one thing I want you to remember on ARKK is that it still has bearish price action with bearish trending. We're well below the 50 EMA and the 20 simple, and all of these moving averages are still stacked to the bear side. So don't just get overly bullish on ARKK for no absolute reason. We're in a bear trend with bearish price action, and we continue to get rejected at resistance levels. So right now, I'm looking for ARKK to continue to go lower until we can get back above that 20 simple moving average, which is right around 127. So critical resistance levels are the 20 simple around 127 and the 50 EMA, which is right around 131. The support levels that we're likely going to keep retesting on the way down are 117 and the support trend line, which is right around 113. If we break below that support trend line, we're coming all the way down to 105. So remember to follow the trend and follow the price action, and you should be able to stay on the right side of these trades. Next up is the VIX, which is the fear indicator, and we did see the VIX spiking today, but we did close back below that resistance level at 21.5 yet again. So the VIX is still not going to those elevated levels where we need to worry about possible corrections or crashes. As long as we're staying below 21.5, there's no reason to expect a huge massive sell-off. If the VIX can get back above 25, that's where you're going to start seeing those drastic sell-offs and that huge volatility. So as long as the VIX can stay in the low 20s and possibly even closing below 20, we want to remain bullish because the bullish probabilities are increasing at lower VIX values. At higher VIX values near 25, the bearish probabilities will increase, and we'll likely want to consider the bearish probabilities as a higher probability chance. On gold, we still continue to slowly drift up towards our price target at 1761. On silver, we're still finding resistance at that 50 EMA, which is right around 26.25. If we can break over there, we're likely going to retest the price target at 26.56. On Bitcoin, we're really struggling around this resistance level that I have here, which is right around 58,600. We still have bullish price action and we still have bullish trending, and we have the entire weekend for Bitcoin to trade to see if it can break over this level. Now remember that Bitcoin is extended on the monthly chart and it really doesn't have a lot of upside left before it needs to go through a correction. I'm bullish on Bitcoin in the longer term, but we still have to be realistic. Will the correction come now? Will it come after we hit 62,500, or will it go to 70,000 before the correction? Only time will tell. So stay on the side of the trend, and right now it's still bullish, but just be prepared for a correction and plan accordingly. I don't suggest buying into Bitcoin at these levels if you're not already in it. So over about 58,000, you're looking at the price target at 62,500, and that could be the very critical resistance level that triggers a correction in Bitcoin. On Amazon, we went up 1.5% today, and we're still coming into that resistance level right around 30.80. Just above there, we have another resistance level at 30.90, and the 50 EMA is also going to be a resistance, which is now right around 31.50. Downside support is 30.33 and 29.50. On Tesla, we went up about 0.25% today, and just like with ARKK, Tesla is still in a bear trend and it still has bearish price action. It's trading below the 20 simple moving average and the 50 EMA. All of the moving averages are negatively sloping and they're all trending to the bear side. You have support down here around 618, but if that level doesn't hold up, we could come all the way back down and retest 550. Remember, to get bullish on Tesla, we need to get back above the 20 and then we need to get back above the 50. If the price action is bearish, you don't want to be bullish. If the trend and the price action are bearish, you definitely don't want to be bullish. Now, if you're in Tesla for the long term and you're just trying to accumulate and you're trying to time the bottom, that's usually okay because you're going to eventually hold long enough where it's going to recover. If you're trading, you want to be on the right side of the trade, and right now you're better off still remaining a Tesla bear until we see the trend and the price action tell us that it's bullish. On Apple, we went down about 0.45% today, and that was a price action close below support at 120. So we now look down for the next support level, which is down here around 116. 120 is now going to be resistance, and we still have resistance around 123, and the 50 EMA is now at 126. One thing about Apple is it's a market moving stock. So if Apple could go back into a bull trend, it's likely going to be very bullish for the triple Qs. If Apple's going lower, it's going to be very hard for the triple Qs to go higher. It's possible, but it's going to be very difficult because of how heavily weighted Apple is in the triple Qs. So look for Apple to possibly find a bottom and try to break back above these resistance levels, because if it doesn't, it could be coming down to 116 or 114. On the financial sector, we dropped over 1% today, but we're still in a bull trend and we're still holding up with relatively bullish price action. On the industrials, we went down about 0.75% today, closing below the 5 EMA, but we're still in a very strong bull trend on the industrials. On the energy sector, we were flat on the day, and that's the second day in a row closing below the 20 simple moving average. You can see the moving averages are starting to stack to the bear side, and we're starting to get some bearish momentum. Right now, I would look for energy to come all the way back down to the 50 EMA, which is right below $47. On healthcare, we went up about 0.36%. We're closing above the 5 EMA, and we continue to develop some bullish trending. Healthcare is starting to look bullish, and it looks like it's getting ready to start trending. So going back to the S&P 500, you can still see that we have a lot of sectors that are still bullish, and we're at a crossroads in some of the other sectors like technology. So at this point in the market, just remain defensive and make sure you're following the trends in the price action. There's some sectors that are bullish, and there's some sectors and stocks that are still bearish, and it's going to remain that way until we get out of this volatile period. There's almost always going to be a sector or a group of stocks that are bullish, even if the rest of the market is looking bearish. So look for the right opportunities, and remember, on the Stocks Channel Discord, I give new trade ideas weekly. Our goal right now is to remain on the right side of the trade and be defensive and make sure that we're doing everything we can to protect our capital. There's no reason for guessing, and there's no reason to try to force trades right now. So we know March was a volatile month and we did have that tech correction, but the month of March is ending very soon and we could see a different market going into April. So be flexible and be prepared for any scenario, and always be prepared to flip to the other side of the trade if necessary. So next up, we'll do our trade idea Shopify real quick, and we did see Shopify going up about 0.34% today. Shopify is still hanging around our buy targets, which are right around 1111 and 1080. If we break below 1080, there's one more buy target down here at 1035. The upside price targets are 1132, the 50 EMA right around 1200, and if we can get over 1200, we should have a quick trip to 1260. So this is one of our newer trade ideas that still has a lot of potential, and as you can tell, it's still sort of just chopping around, which is great for entries and exits. Get in quickly and get out quickly, buy at support and sell at resistance. This should be a nice trade idea for a few more weeks until we get up to our final price target, which is all the way up here above 1300. Don't forget, there's new trade ideas weekly on the Stocks Channel Discord, and you can find out how to join by clicking on the link in the description of the video. So happy Friday, everybody. Have a great weekend. And as always, I will see you in the next episode.